Well, since yesterday, January 16th, it was a holiday, federal holiday. The markets were closed. So this is going to be a short trading week, only 4 days. And that generally, but not always, means that the premiums I can expect to get for the options I sell will be a little smaller. Nothing I can do about that. And on rare occasions, I've seen some instances where, for example, at one time I got $1 a share on a put that was less than $10. Why anybody would pay that just a few days left on the contract, I don't know, unless they were trying to close out a position, and $1 a share was the cheapest way for them to do that. I can't imagine people getting in that shape, but people do, particularly the real speculators. Anyway, and I don't speculate. I mean, I basically see what the market will bear on a risk I'm willing to take on. And over time and following the transaction set, you've seen one page of that as the background here. That's worked out well for 15 years or so. Well, now it's soon going to be 18 years. Time flies when you're having fun. But at any rate, it's been good for me. And I got an inquiry recently about whether or not I wanted to become a financial advisor. And I'm not a financial advisor. I'm showing you the trades I do. If you choose to take something away from that, that's fine. If you don't, that's fine as well. If you do mirror my trades, that is, you copy my trades, the only thing I can promise you is that you'd have the same results I do, better or worse. But I'm not going to tell anybody how to handle their money. I don't want that liability. So at any rate, my website is entitled My Trades. All I'm trying to do with that is to show you what I do and the results from it. You can draw your own conclusions. So having said that, as a way of a little bit of a disclaimer, the futures are pointing to a slightly lower open. And since I'm for the third time trying to sell put contracts, the first 2 times were not exercised, which fits the diagram in the background perfectly. Oops. Never get used to the camera. Everything's backwards. At any rate, this is the ideal scenario. I've collected $1,459 in premiums on contracts that were not exercised. Well, that's all profit. Anyway, well, what I'm doing today is I don't trust this market rally. I just don't see why everybody should be so optimistic, but maybe they're right. But at any rate, I don't want to set a really high strike price. So I've got the strike price I want, but that's going to mean I get a less of a premium. Let me show you. And I got to go back to the settlement Saturday, and this shows the order I'm trying to get an order for 20 contracts with an $8 put sold for 20 cents a share. Excuse me. Now, that's a nice premium, $400 if I can get it filled. And that combined with the $1,559 is $1,859 I would have gotten just on the put side. So that means my spread is already covered. The spread meaning the difference between the strike price I have to choose for the calls and the replacement cost of the stock. So that's looking mighty good. Please, if you're at all interested in what I'm doing here, this is the document this is the training manual, if you will. And this is a concept I came up with some time ago. And the link's down in the description. But that you really need to understand if you want to do this. Otherwise, I'll just try to keep you entertained. Which is not necessarily my cup of tea, but at any rate, I enjoy doing this. Not just the YouTube and whatnot and the website, but I mean, I actually enjoy the income that I've been able to achieve from this endeavor. So we'll see how the market opens, whether or not I can get the contract sold. If the market opens lower, that's going to make it more likely that I'll get 20 cents a contract for my $8 puts. I mean, $8 puts. So anyway, this will be the third $8 contract that will have been sold on my assets. So that's pretty good income. If you have questions, put them in the comments. I do my best to try to answer all the questions. However, most of them could be answered if they'd simply read the transaction set documentation. But at any rate, and the other question I get is how much money does it take to do this? Because when I sell these contracts, I'm liable for their fulfillment, and the broker encumbers my cash or stock to be sure that can be contract can be fulfilled if exercised. So how much? Well, I typically for myself consider $10,000 to be the minimum. I have gone much higher than that in the past, and I've drawn out large amounts of money in the past to suit whatever it is I wanted to do. But this is a key document that you need to understand. And if you have any questions, particularly about the transaction set, please put those in a comment, and I'll do my best to answer your questions. The other thing is, in the description, there is a link where you can subscribe to my free mailing list entitled My Trades. I use a service called MailChimp to do this. It's a free service for me as long as my list doesn't get too long. I like to think, and the best I can learn from their policies, your email address should be safe and not sold by them. And I have no desire to sell you anything, so I don't care. In other words, I don't share it with anybody. So, but what it gives you mostly is a head start. By that, I mean, you get information faster than people who are just following me on YouTube or who are following my website. The reason I do this is I'm trying to separate those who are seriously trying to do this, do what I'm doing, from those who just have a passing interest. Plus, I have some other playlists on my channel that have to do with like welding and my recollection of what it was like growing up in the 1950s and stuff like that. So I'd say the mailing list, what I call the newsletter, would be more appropriate for more serious, for people who are seriously trying to understand and maybe even mimic what I do. But here again, I don't promise you anything. But if you do mimic my trades exactly, then you will get exactly the same results I get, for better or worse. So, but anyway, my trades for the last 2 years is documented in detail on the website, and that's all I can tell you about that. Well, let's have a good week, what's left of it, and try to make some money. And I appreciate you viewing my YouTube channel and the videos therein. And back to the newsletter just for a moment. One of the benefits you get from that is the videos I'm doing, like the one I'm doing right now, will be released for public view, roughly an hour, sometimes more, after the subscribers of the newsletter have the link to see the video while it's still in a private mode. It's just sort of an incentive for people to do that. People are reluctant to get on a mailing list. I know I am. Fortunately, on Chimp Mail, or MailChimp, it actually is MailChimp. They do have there's always a link in the emails to unsubscribe, and it does work. So it is something you can get out from under without having to get emails for the rest of your natural or unnatural life. So at any rate, that pretty well covers it for this morning. When the market opens, and I get my orders filled, or if I have to change my orders to get them filled, I'll try to get that information out as quickly as possible so that people who are trying to mimic my trades can make adjustments as well, should they choose to do so. All right. Well, look, thanks for watching. Please hit subscribe. If you like what I'm doing, hit like, and use the comments to ask questions or make suggestions. All right. Have a good day.